Good morning, everybody, and this is your S&P 500 day trade setup for today. So we did try to get a trade in yesterday. I gave it to you on the Telegram channel. It didn't quite work out, got stopped out of that, and it was pretty much a retest here of this consolidation. And I suppose in hindsight, stop should have been a lot further down here. But anyway, wasn't quite sure, so we took a tight stop, which got hammered. I'll give that detail for you later in the video when we get down to lower time frames. A couple of things to bear in mind. Firstly, trend line here, trend line top. Okay, so it does look like a bit of a wedge. Today is options expiry day, and if I look at all the strike levels, we have, let me just give them to you quickly on the S&P. So the major strike levels at the moment are 4075. It's pretty much, I think that's where the bulk of them are. There are a couple at 4080, but 4075 and 4070 are the ones where there's a lot of open interest, and that's on the call side. On the put side, which is the bearish side, 4080 is also a substantial amount of open interest there. So, yeah, sorry, 4075, 4080, and 4075. Those are the big ones. Don't think there's anything. 4060 is another interesting area. But anyway, I think the point is between 4060 and 4080, that is kind of what we're going to muck around with today. So what you'll find as we get close to options expiry this afternoon, there'll be a little 15-minute auction, and that auction will increase some volatility and then it'll calm down. Okay, for me, trend is up. There's no reason to be panicking at the moment. There is also a Fibonacci retracement here, which is very, very solid onto the 50% of the previous move. Okay, so that is definitely in play. At the moment, our weekly is not looking very good. Look at the oscillators grouping very nicely to the downside. Nice inside bar here, and still in an upward trend. So the 1 hour gives us a little bit of a bit different picture, and I think I can delete one of these things. Let's delete the Fibonacci. There we go. So the 1 hour gives us a little bit of a different picture. We've got a grouping and crossed over, so pointing to the upside, and it does look like a double bottom. Obviously, we need to get above that level there. Problem is we do have crossed over moving averages, so we'll have to wait for a crossover there as well. But at the moment, 4363 or 4364 is the area to pay attention to. There is another trend line here that we need to pay attention to, and I'm just going to do that. So expect a bit of a messy bounce around until options expiry is over. So yeah, I'm in for longs. I think this was probably a decent area down here. Not that there was any level down there. So if I look at that and you look to the left, you would have expected it off this area here, which is 4357, 4360. And this is the area when we started seeing these tails, I decided to take a chance and had a stop below the swing low. Obviously it didn't work out. The market came down and stopped it. In hindsight, the stop should have been below this, but that was quite far. Risk to reward was quite heavy. Anyway, I suspect we'll get an opportunity to buy into this today. I don't think there's no doom and gloom. This is really just drifting sideways. It's not really that big of a swing. So I am still looking for opportunities to buy. So we'll just have to see what happens at European Open, see if there's an opportunity there. Otherwise, we'll wait for the US Open and sort of wait for the lower end of the options expiry. Remember, so I've given that to you. That's 4360 to 4380. That's the range that you can expect us to bounce around in the first part of the session when the US opens. Okay, anyway, that's it for me. Sit tight until this afternoon and then we'll see if there's an opportunity for us to trade. I still believe 44,000 is what we're after, but we do have a measured move here if this plays out as well, so bear that in mind. I'll be conservative, take it to there and off this level here. So we've got a measured move which is 44.33. So just bear that in mind as well. Okay, anyway, that's it for me. Hope it helps, and we'll catch up with you on Monday. Cheers for now.